Happy Wealth Wednesday, Sasha. I'm so glad to have you here today. I'm so inspired by the communities and the events that you're running, but also you as a public and private investor. So thank you for being here.
Awesome. Thank you so much for having me.
What was your first ever investment? Do you remember? And do you remember what got you started or who told you about it?
So I had just started at Lehman Brothers. It was the crash basically of 2008. And so I'd received a signing bonus a few months before, and November 2008, things were just going so red. It was a bloodbath. I didn't have a ton of money, but I was like, you know what? I'm going to take a good chunk of my signing bonus and I'm going to put it in the market. And at this point, Lehman Brothers had failed. And so my thought in my head was, they're not going to let all the banks fail. And so I'm just going to invest in all the other banks because something's going to happen here. And it was actually a really good lesson. So I ended up putting in money. I made about a 10x return in about a year, actually. I bought all of the financial stocks. I remember one day, okay, not all, but like a lot. I bought about 12 financial stocks of banks. I bought everything from Citigroup to JP Morgan, Goldman, other names you've heard of. And I just kind of put a little bit of money into each of them. And it was really the bottom. And I think at that point, people were very scared because it was turning very red. It was the beginning, and kind of at that point, it was 10 years of upswing afterwards. But I learned a really good lesson from it, which is when everything is turning really red, it's actually a great time to buy. And it's usually when a lot of people sell because they're really scared. But I watched this lesson in 2008, and even now, the last couple of days in the market have been very red, and I've used it as an opportunity to buy. So it was a very good lesson learned very early on. I think I did have a thesis. I didn't use all of my money, but it was money well spent that ended up good.
How and why did you get into your space, both in terms of what got you into the industry of finance, out of school, and also now the space of both working in funds and creating events and experiences for people?
Yeah. So truthfully, I probably should have been a computer scientist and an engineer, but no one told me that. I didn't have parents who knew what to tell me to do in school. I was good at math. And so when I went to college, I pretty much just majored in anything that let me do something around math, which at the time was accounting and business economics. And then from there, there's only so many jobs you can get. And so at the time, I feel like I was in school back in 2005 to 2008. And at that time, a lot of investment banking was still a huge hype. And so this was the thing to do. You can make a good amount of money. You're going to work way too hard, but it's a cool job. And so that's really how I ended up in the space. I didn't exactly mean to go to a company that would go bankrupt 3 months later, but it worked out well for me. And so when I went in, really, the truth is, after college, I was like, all right, well, this seems like a decent path, and I'm good at math, and I will get to go cover interesting tech companies. So it might work out. But in the end, it actually ended up being really great. I would say working in banking was one of the best experiences in my life. Yes, I worked 100-hour work weeks, but I got huge exposure to a lot of C-level tech executives at a very early age. Learned how to kind of present to them, spent a long time just kind of diligencing companies, reading through filings. And so I learned a lot about how to look at a company, what makes a good investment, how to take a company public. And so in the end, for me, that was really interesting. And that's what kind of got me started. And then when I kind of left finance and I had a bit more money saved up to actually start investing, that's when I started just doing a lot more. And I started pretty small. I think at the beginning too, if you just go too hard, you don't know a lot, right? And so I think there was a big effort to take, 20% of my portfolio that I allowed myself to play with, and then the other 80% I put in the hands of people who actually knew what they were doing. And so I took that 20 to start making investments in private companies, and then start really following the markets a lot more to just kind of understand okay, these are companies I'm really bullish on, or as an operator, I'm seeing this really evolving in the tech space. I think I should invest there. And realistically, even to this day, everything I invest in is stuff that I understand. I don't tend to invest in asset classes that I just don't get, or that if their filing comes out, I don't know what it's saying. They do an earnings release, I don't know what it's saying. So I have stuck to this idea of wanting to focus on things that I actually understand, that I use as a consumer, and that, are worthwhile. And And as I've sort of gotten better at this, I started kind of curating groups and communities to focus on this more as well. As you start to gain more wealth, the truth is wealth preservation and growth is really important. Let's say you have $1 million, you need to get that to 10 million, right? Or you want to get it higher. And so it's really hard because a lot of the best investments are reserved for people with a lot more money. So how do you go and find a way to take what you have and grow that at a faster pace, whether it's later stage investments, whether it's crypto, whatever it may be. And so as of late, I've definitely been working with a lot more people to help bring them into later stage deals, to help them work with folks who are really focused on people with lower, I would just call like under sub $10 million net worths, and helping them grow that at a more active pace, finding optimized tax strategies. And so I understand the pain of being in this seat and how it's hard to sort of not be paid attention to if you have under $50 to $100 million, where, the rich have the access to all the best things. They have the best access to both advisors, investments, everything. And so how do you do it when you don't have as much access? And so kind of creating communities that allow us to get better access.
What role you play in the wealth space and why it's important. I'd love if you could share what you're doing with experiences.
Yeah, definitely. So I curate a lot of group trips for women. There's sort of luxury adventure trips around specific topics. So everything from learning how to sail to cooking experiences. And so one of them lately has really been a focus around financial literacy. I am not an expert on crypto or anything related to that space, but a lot of people are just generally interested in how to really think about that growth from 1 to 10. And so I have been kind of bringing together people and topics and speakers on this, people with speakers to kind of discuss like how to actually make that jump and how to focus on kind of 3 areas. 1, optimizing your tax strategies so that you are paying the least amount legally, obviously. And then 2, where to think about asset allocation for yourself based on what your current portfolio looks like. And then 3rd is really just access to a lot of these investments. So I've been helping to give more access to people in terms of both early stage and late stage that might be more fitting for them at lower check sizes. Just because it's hard with certainly some of the later stage investments, you need to put in $1 million plus in a lot of these, if not more. If you want to be in an LP in a good fund, it's 5 million or more usually. And so to do that is a large check. And so how do you start to take your funds if you only have 100,000 to put in, 200,000 to put in, and where can you allocate that money without paying, tons of carry and fees? And how do you do that strategically? So bringing more people together and giving them more access to get into deals like this.
What do you think is the most exciting thing you've learned that you would want others to know?
I'm a really big proponent of just basically focusing on the things that like there's this idea that, everyone's investing in NFT and crypto and they all talk about it. And there's always going to be some new rage, the metaverse, whatever it is. If it's like too scary for you to do that, or you don't have the risk profile, it's okay. Like, I think the 2 things that I've learned are like, 1, give your money to somebody else who's an expert, who can really manage something, who can actively watch it. If you are not someone who can sit and watch, whether it's the markets or crypto or anything else, the truth is a lot of these things move really quickly and you can lose money very fast. And so I think the one thing I've kind of learned is like, take the pocket of your money that you want to be responsible for actively managing. And whether that's in real estate or crypto or even tech market investments, whatever it may be, take that and then the rest provide to people who can really help you, so that someone is sort of actively managing it. And I know there's a lot of sort of distrust lately. I hear of, oh, well, financial advisors just kind of take my money. And I don't know if I really believe that, to be honest. I've had a lot of success with them. I think it's about finding the right person and then slowly sort of build up your intelligence around the areas that you're excited about and that you want to invest in, because you can, lose your money just as fast as you're making it. And so, or certainly a lot faster actually. And so for me, I just think it's important to separate the money that you kind of want to play with and learn and really invest that from the money that's like more of your safe haven that until you're very sure that you can kind of invest in yourself and what you're doing.
Is there a person or a company that inspires you in the space, and why?
So less about inspiration, but more about where I get a lot of my news. So I think there's kind of two types of investing that I do. One is a little bit longer term, where a lot of the investments that I'm looking at are 12 to 24 months out. They're in retirement accounts. And so I really have a thesis around a sector and I'm looking at what to invest there. And some of those are much longer. They're even 3 to 5 year plays. And so for that, I read everything from The Economist to Bloomberg to sort of research and trends reports by McKinsey. You can literally go on McKinsey's website and sign up for their trend reports. And I'll actually pick sectors that I'm really interested in and research those and then figure out, all right, what companies do I think have long-term value? And then there's the more kind of day-to-day as well, and just generally for the markets that I trade that are more like 6 to 12 month transactions. I'm not day trading. And so I tend to sign up for Goldman Sachs has research. It's called GS Briefings, and you can just go to their website and sign up for it. Morgan Stanley also has one that I like. Many of the big banks actually do publish this. If you just go to their site, you can sign up. And I read it. I mean, they send pretty regular reports and they talk about everything from inflation to trends that are actually happening, and then specific stocks and interviews. They also have great podcasts. And then every day I pretty much generally look at Bloomberg, and then I set up news alerts on Google for all the stocks that I'm actually invested in. So that way, if something really scary happens, you can pretty much catch it. Or if they're going to release earnings, I generally know what's happening. So I might be a little bit more boring and looking at sort of thesis driven overall macro sector trends, but I tend to find that that helps me put together a better strategy that lasts several months. So I don't need to actually check the market every single day, which would otherwise drive me nuts.
Fantastic. And what advice would you give to somebody getting started?
So making the assumption that you don't know a ton kind of about either public market investing or private, I would say take a little portion of your money to just kind of play with and then give the rest to someone that you trust. And I think, nowadays, a lot of times with bigger funds, you need to write a much larger check to be an LP. So let's say you want to do some private market investing, but you don't have $5 to $10 million. There's a lot of new funds popping up like Portfolio that let women come in and invest. And I'm just highlighting this one as women because I'm a proponent of wanting more women investors. But they will let you come in and write a check as low as $10K to be an LP in any one of their individual funds that they're raising, and they do multiple per year. So that's kind of just one example of one. There's certainly others, but I would recommend basically taking your portfolio and taking a percentage that you're comfortable just playing with and using that for both public equities that you want to trade or individual private investments or even real estate if that's where you want to play and are new to, and going ahead and using that. So if all of this money went away, though, it wouldn't be catastrophic. And then take the part where, the rest of it, let's say 80%, 70%, whatever amount you're comfortable with, and either put that with a wealth manager, put it in things that are just a lot safer. And so that way you have a little bit of a split of things as you start to learn, and start small. Like I think a lot of my first investments were very small. On the angel check side, they were $10K when I first started, and now I will write ones that are significantly bigger. And then even in public markets, like sometimes I would just put $1,000 into a stock. And so I think it just makes sense as you start to learn. You will make many more mistakes in the beginning. The initial trades that I made, especially for angel investing, did not go well. But then, I started to do more, talk to more companies, and it kind of takes a couple of years to really learn, trust your own gut. And then once you get there, it makes sense to double down because you'll actually be in a much better place.
So fantastic. And is there anything else we should know? How can we follow you and everything you're up to, new trips you're posting?
Feel free to add me on LinkedIn, send questions if you have any directly. You can follow me at the Sasha Edition on Instagram, where I post some information about the trips. And everything that we do is by private invite. We try to very carefully curate everyone who's coming, as well as the speakers. Everything is small group, so it's very intimate, and you have an opportunity to ask questions in a safe setting. And so, yeah, feel free to follow me, ask questions, and then when you get on the listserv, you'll get invites to what's happening.
Fantastic. Well, we'll definitely be following along. Thank you for chatting with us and everything you shared.
Thank you so much.